What is it, though, about Bitcoin specifically versus other alternatives or, say, distributing extra cash back to shareholders? What is it about Bitcoin specifically that, in your view, makes it a logical asset for companies to at least put some of their money in?
Well, I mean, let's look at the big picture. I've been a public company officer for 22 years. When you could generate 5 to 6% short-term interest on treasuries, and you thought that the cost of capital was 7%, then you didn't have to consider anything other than a conventional treasury strategy. You're maybe taking a minus 2% yield per year. I think that when conventional treasury assets started yielding 2% and you had a cost of capital of 7%, which is the expansion of the money supply, it became a minus 5%. People, they grit their teeth and they got through it. That was for the past 4, 5, 6 years. Now in 2020, we've seen the cost of capital explode. It's 25% monetary supply expansion. The treasury strategies are now 0, 1, less than 1%. So you've got a negative real yield, minus 25%. That's the cost of capital. Okay, that's actually turning up the heat that's causing everyone to realize that conventional treasury strategies are broken. Now, what are you going to do? Look at the last 12 months, ROI. Bitcoin is up 461%. S&P is up 25%. If you invested all of your treasury assets in the SPDR, in the S&P index, you kept up with the cost of capital. NASDAQ's up 53%. Big tech, they're monopolies, they're extraordinary, they're staying ahead of the cost of capital. Treasuries down 7.7%. If you were holding long bonds like TLT, that's a disaster. Gold up 9%. It's also a disaster. It's not keeping up with the cost of capital. So why Bitcoin? Well, you can't hold conventional treasuries. You're looking at a negative real yield against the cost of capital of 15 to 25% a year. Right? I mean, I'm not a consumer. I have to manage shareholder value. And if you want to maintain or grow shareholder value, you're going to have to grow your assets